Good morning and welcome everyone to the Ultimate Trading Webinar for Beginners. My name is Danny and I will give you the webinar today. And we will begin, as I said, with an introduction to the company. So as many of you know, we are a regulated company. We're here since 2006. In case you got a question or a query, you can find our customer service right here at the bottom left. You can contact us on the chat, on the WhatsApp, or through cs@avatrade.com to assist you with your customer service inquiries. Other than that, you can ask for your senior account manager to assist you with trading. Senior account manager can assist you with strategy, risk money management, and all kind of useful other things along your journey. So a senior account manager can be assigned on your file depending on your eligibility. You can check it with customer service. Other than that, the interface that we will use today is called the Web Trader. We're using the desktop version, but we also have it on the app. It's called the AvaTrades Trading app. Okay, we'll speak about it in a moment as we proceed with this interface anyway, but I would like to mention we've also got the MetaTrader 4, MetaTrader 5, and just a second, AVA futures and AVA options. And lastly, AVA social. The reason that I'm showing you this today is because AVA social has a very unique features that can assist you as a beginner and as a trader in general. Those features are follow and copy. What does that mean? It means that if I am, as an example, trader A and I would like to follow trader B, what will happen is I'm going to get messages with the positions that trader B has taken, which allows me to basically observe a strategy without even trading by myself. I can get the notifications and I can either trade the same way or not. It's important to understand that the positions will not be opened automatically using this feature. Using this feature, the follow feature, we're going to get the information as messages and it's for us to use or not. Copy from the other end will actively open positions on my behalf. That means that when I'm copying another trader, I'm basically linking my account to his and everything will run automatically on my account. It's also important to know that I can go back then and review what positions were taken. I'm not blindly copying another trader, but I can see in my interface what position he's taken that is still active, what positions were closed and when, and I can do my own research, which is very helpful. So we said follow doesn't open positions by itself. I need to actively open the positions based on the messages I received or not if I don't want to. And copy means I'm still going to be able to review the trades that are that been done, but it will run automatically. Automatic trading. All right, so those two features with Ava Social, like I said, we're going to carry on with the Web Trader for your convenience. We're going to also show you a few interesting features we've got here to the left. It's also important to know that this, like I said, is the desktop version. So whoever is using a phone or something like tablet might look a bit different, but still you can enjoy the same features. We're going to begin from the upper, from the menus to the left, from the first one at the top, and then we're going to go down. The first one, those three lines, is where I can find my personal information. Underneath is trade, is where we are with the chart. Positions, I can review my positions, order for pending orders, and history to go back and review what I've done. In here in the signal section, very easily I can click here on the signals, pick whatever signal I've got. Let's suppose we're going to go with oil, just as an example. We see that there is a type for the position. I can click on the signal, and then I already have the entry price, which is the initial price when this scenario was analyzed. Then I've got the stop loss, which is a value I can define on a platform that stops my position automatically with a loss. We'll explain it in roughly 30 seconds. And take profit is something that I can design to close my position with the profit. They are both pending, they are both automatic values that I can embed in the platform that I'm going to show you in a moment. However, when I'm using a signal, I don't need to do either take profit or stop loss, and I will show you how. We click here on view signal to see what the signal is. We can also expand the chart. See, there are some levels here, resistance, support. Okay, so basically resistance and support are higher or lower than the price edge points that we can pinpoint based on the pivot. And we can see that this is the resistance 60.08, and in here it looks different. Why? Because in here it's daily, and I'm looking at, let's click here at the left upper corner, 1M. 1M is 1 minute. Every candle on the chart presenting 1 minute. So it's not, we're not going to get the same picture looking at daily candles with minutely candles, right? What we need to do is we need to scroll down, and then click on 1D. And then we can get somehow a similar picture. It's not exactly the same, but at least we can get the same levels drawn on the chart. Let's suppose 61. Maybe we'll switch to a bit closer time frame, and that just makes more sense. 61.5, that's around here. And we've got the second line, 61 flat. I don't have to click and drag. I can land it, then change the coordinates, right? Okay, I'm going to show you how to place those lines, guys. Don't worry, we haven't got to the practical part. I'm just demonstrating how the signal is constructed. We've got 59 also flat. We'll flatten that out as well. And we're pretty much good. Right, I could add this bottom line here, 58.3, but it's unnecessary at the moment. It's irrelevant. So we've got some levels here already prepared for us. We've got here sell scenario, buy scenario. All right. Well, in a sell scenario, our intention is that the value will decrease, meaning that if I'll click here on sell, and it's going to take me onto the order entry to use the signal, then we see that the take profit and stop loss are already prepared for us. And this is what I said in the beginning. When we're using a signal, the whole point is to enjoy pre-made analysis based on the scenario we see here. So again, just to show you how easy that was, we're going to click on signals, and then we're going to select from the list. We see the scenario. We click here on view signal, and then we can click on buy or sell. Let's maybe go with a sell. And it's prepared for us. It's prepared for us, as I've explained. Pending take profit and stop loss are both pending order. What take profit does is it closes the position automatically with a profit, and what stop loss does is it closes the position automatically with a loss. Okay, but why would we want to close the position with a loss? That doesn't make any sense, right? Well, the idea with a stop loss is to prepare the position to a price that if it gets to that price, we don't want the position to proceed. That's the idea behind it. So in this case, the stop loss, this is with a sell, so our stop loss needs to be at 60.3. 60.3, that's here. I don't have to place those lines, by the way. I'm just demonstrating it for you guys, but you absolutely don't have to place any of the lines that I did. Okay, since they are already prepared for us, if we go back to the previous screen, right here, prepared for us to use. We've got the take profit and the stop loss, which we've explained are embedded in the signal provided by the Trading Central, and we can simply click sell and use it just like that. Of course, we can do further analysis and analyze the scenario even more and place some lines and so on and so on, but we don't have to if we don't want to. One last thing that I'm going to show you, maybe we'll choose the dollar index actually. We'll click on view signal and we see that sometimes the market has already fulfilled the scenario and suddenly we can't use the signal anymore. The market has already reached a key level. In other words, the scenario that was embedded in this signal has already happened, which means that those pending orders are going to be futile. And if we look at the outside, we don't even have the take profit or the stop loss. If we'll still try, click on view signal and still try to use it, even at its own type, it's not preparing us the pending orders. Okay, moving on. This is, by the way, this is called, there are two types of analysis. There's technical and fundamental analysis. Okay, so we've got technical analysis, we've got fundamental analysis. All right, and the idea is that with technical analysis, we're using numbers from the chart, averages, right, statistics. And with fundamental analysis, what happens is we're using news, right, articles, all kind of reports that help us indicate what happens behind the scenes. So this is why, so-called, right, why it's happening, and we've got how it's happening. How it's happening, that is the averages, statistics, and support and resistance that we saw in the signal, as an example. So how do we get the news part? Well, we can click here on the news and see here on the news, we've got all kind of different articles which we can go through. And at the bottom, we also see what it's related to. And we can directly go onto those instruments and see the effect. We have different categories in here. Underneath, we've got discovery, and in discovery, there are two of my favorites. One of them is market buzz, which I can quickly catch up with what is interesting these days for us to read. And in a moment, we're going to see that the bubbles are getting bigger as dimensions that they have. So if we look at what's in the middle, it's Tesla. In here, we've got NVIDIA, we've got HIMS, we've got super micro chips, and all the rest of the things. We'll click with we'll go with what's maybe in the middle, just clicking on it, seeing it's also divided to different topics. We've got revenue decrease, earning announcements, conference call, product release, and product demand increase. I don't have to go through all of that. I can just select what I want, earning announcements, and then directly read the articles according to what I need. And then I can directly go to Tesla and trade when the market will be opened. Again, very straightforward, very useful. Yeah, we can go back, select another one if we want. And okay, and at the bottom, we've got here one last thing, which is the economic calendar. And in the economic calendar, we can practically find those results of announcements, news, and important things happening in the economy. As an example, we've got this week, I believe, the NFP. So I can search for a particular event, click on none, and we're gonna, okay, we're getting a lot of things. So maybe we should filter them a bit. We'll begin with clicking on today's date, and okay, nothing appears because there is no non-farming payroll today. We're going to fix that in a moment. And we're also going to select what we analyze specifically, which in this case can be maybe only the dollar. So we'll click only on the dollar. And maybe one last thing, we'll click on high, since we only want high impact event. And then we will extend the date from the 30th to the maybe 2 weeks forward. Makes sense. How can I know that it's selected? Because I've got this blue trail which shows me from what date till what date I've selected. So from the 30th out of the month till 14th of May. And it appears. Okay, it appears the non-farming payroll which we've searched. If I'll click here on the X, it's going to show me all the rest of the events summarized between those values. We'll click again on today, 2 weeks, and now we only get high impact event for the dollar. We can add the Aussie as well if we want. Then we've got news about the Aussie. Great. Okay, and one last thing I would like also to show you guys here to the right. We've got those nice icons with the impact, volatility, price chart, event chart, and last is the add to calendar. Now, since I'm a busy person and I have a scheduled day, I'm not necessarily going to wait for that event to happen and then go do the analysis. What I can do instead is I can just book it to my calendar, and then I get a message, I go directly to the chart, I got the news, I got the results, I can act accordingly. Again, very straightforward, very efficient. Right. Before we begin the second segment, are there any questions or anything that you guys would like to share with me? And in the meantime, we'll prepare our chart. Clicking on here will take you to the default screen. We'll expand the chart, and in here in the search field. So there are two ways to search for your instrument. One is manually through to get the categories, and the other one is to erase what you've got here and just to type down. Now, I think Nasdaq has been quite interesting. So what we're going to do is we're going to expand the chart clicking on the two arrows. In here, we're going to erase, type Nasdaq instead, and select it, Nasdaq, and select it from the list. Okay, I think we've done Nasdaq last time, but I'm not really sure. Let's maybe see how oil is. Okay, wow, that's also pretty interesting. All right, so we'll carry on with oil. All right, which is bearish somehow. And we can see at the moment that, okay, before we begin with the looking at the chart, first I want to look at the toolbar. So we would place the lines to make the situation here a bit more readable. Yeah, so in here we can search the instrument. In here we can change the time frame. You saw that what was selected in the beginning was 1D. I switched to 1 week. Moving to the right, we have here candles, bars, or line. We spoke about it many times that with the lines we don't get the same depths as the candlesticks, and the reason is, as you can see, where there are ovals, you're not going to see the tail of the candle, which can point out significant reversal, and it's useful. There is a question from Mr. Bombi. Hi, all are this analysis done with duplicate trade automatically or any robots or AvaTrade? Thank you for the question. That is entirely something else, Mr. Bombi. Duplicate Trade is a third-party company we work with, which allows you to connect your account to another trader's account and enjoy automatic strategy. We're not fully aware of how the analysis was done, but that's just how it works. You can get more information from your senior account manager, which I'm sure can give you full support through the process. I appreciate your question. Thank you. So as you can see, if we carry on with what I've said about the toolbar, in here we've got ovals around some levels here. We'll click back on the lines and then we'll see those levels are no more. The reason is that the line doesn't show you the same depths. We'll click back as we want as much precise analysis as we can get. Following, keep going to the right, we've got here the crosshair. Now we've got no data pointing on the candles. We click on here, change from no crosshair to crosshair, and now we suddenly see we do get the numbers, including the date, open, high, low, and close. In a moment, we'll understand how those can be useful. If we keep going to the right, we can even change the layout to different charts. We can see instead of only oil, we can have oil and maybe NASDAQ, since we wanted to analyze NASDAQ. We'll click here on the chart, then we'll click in here again, and then we'll put the name of the instrument and select it from the list. And then we've got NASDAQ and crude oil presented. We can click on the buy or sell to open the order entry and carry on taking a position. Now we'll go back, carry on with crude oil, and simply think about a position that we can take. To begin with, I would like to click here on the two arrows. There is a question from Jens. In what time frame would you use WAP and Fibonacci tools? In what time frame you're using SMA? This is an excellent question, but I believe that it will be more appropriate to speak about it towards the analysis part. Still, thank you for the lovely question. If you can remind me in 5 minutes, I can definitely speak about that. Yeah, so to begin with, we'll click here on the arrow pointing down. The reason that I skipped indicator is because we can use one of the indicators anyway. Oh, we don't have SMA in here. SMA stands for simple moving averages. Just a moment, guys. Excuse me. We don't use it in here. We have average true range, which does similar job, and I'm going to show you that in a moment. Okay, we'll carry on, and then in here in the tiny arrow pointing down, we've got a nice list which I've placed those ovals from. We can also select the price line and place it at the top of those corners, candles, sorry, and then slowly construct the differences. There is a question, Jens, you ask about Fibonacci retracement. I think it's appropriate to show you how to do this confirmation. So as you can see, the levels does make sense, and this is a great way to measure, as Fibonacci is based on certain percentages and differences, which you can see, which will remain always the same percentages. I don't think we'll have a lot of time to speak about that. This is why I'm showing you the primitive manual version of doing that. The second thing that I'm going to do is I'm going to put a rectangle here at the bottom to remind me to focus on that area, and a rectangle in here to focus on that area, and maybe the center line in here. Now, if I'm looking at crude oil thinking it will recover, since I'm looking at in here, we've got this nice candle here, which is built pretty much like a reverse hammer. Maybe we'll get rid of all this shenanigans around so we can better see what we're doing. We've got this nice V shape, as you can see, like a Nike sign or whatever you want to call it. And you can see the differences in here. So I have a reason that crude oil, I have a reason to believe it might bounce back. But my issue here is now that I need to think about what price am I going to select to. Okay, so let's first reduce this to 0.01. And now with this in mind, I'm thinking what price will be reasonable to close the position. At the moment, let's suppose that I'm going to click here buy. I'm going to buy it just like that. But we saw that it moved down. So I need to ensure myself somehow that if it goes farther down, we're not going to have a big loss. And from the other end, I want to know when I'm going to close the position. Will it be here, 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 here? So what makes sense? Let's select the first line, paint it in green. Let's select the bottom line, paint it in red. Then we'll also place a line in the middle just to represent what is in the middle. Maybe we'll put it right here and flatten that out to be 58, and we'll paint it in red as well to help emphasize our profit area and loss area. We're going to draw two rectangles, which are not obligatory in any way. Again, I'm giving you guys a webinar, so you may use it or not. And you can see that since we are in a buy scenario, our intention is that the value will increase. And if it goes down, we're going to have losses. How much losses? Based on the number of barrels we've got. So we'll wipe out everything in here. We'll put crude oil, right? Crude oil. And we'll also think of a way to estimate our levels to know that we are, it's realistic. So let's suppose that we're going to target 84. I think 84 is a great level. Looks very, very high, and I think a take profit might be suitable to be there. Also, we're going to look at the stop loss as our support line, just as a reference for this example, and that doesn't seem too bad. 280, 241. This is how much we can gain. This is how much we can possibly lose. So we've got to calculate it for us before we did anything. All we did is we just placed take profit and stop loss, and this calculated for us automatically. Based on what? Based on the number of units we've got versus the price difference from entry to close. To understand that better, let's call our entry, and instead of buying it now, let's flatten that out with an execute when price hits and change it to 60. And now what happens is 60. Okay, 3 pending orders. As we said, stop loss, take profit, execute when price hits. What it does is automatically open a position when reaching the designed price, meaning instead of buying or selling now, I can just set whatever price I want and it will launch the position on that price instead of that price, which also allows me to measure specifically what I can make or lose. Now, let's suppose that we're buying at 60, thinking it will go higher, but God forbid it goes down. It goes down to 55. We'll flatten that out as well. Okay, we can lose $50, and if it gets to the green line, we'll make 240. Amazing, amazing. How can I know if this 84 is realistic to get to, or it will get to 55 before that, which can trigger the position to close with a loss, which we're trying to avoid. So our target is take profit simulated by the resistance line. Resistance are at the top, support line are at the bottom, and we've got stop loss at 55. Okay, how can I know if it's realistic? We're looking at let's do 60, 84.5 minus 60 to know the price difference. That equals, okay, we'll use a calculator just for the goodwill since we're in a webinar. What I did is I measured the length between my entry onto the take profit to know how far away I am. And 55, the other one, so we're gonna do it the other way around, which gives us $5 away. Now I'm asking you guys, do you think that those levels are realistic, or this 84 is too far for me to get to? There is a question, do you offer copy trading? The answer is yes, Bombi, we're offering copy trading. I spoke initially about Ava Social, and somebody else here asked about DupliTrade, which is a third-party solution. So there are other solutions for you to explore. I'm asking you guys, do you think that 24, do you think that crude oil can get to 84? Will crude oil will get to 84.4 from 60? What do you guys think? And in the meantime, I'm going to show you a nice way to measure the difference, to know it manually and with an indicator. One nice way to do that is to take the previous candle and to analyze the differences in its numbers. So let's take the open, high, low, and close. Open is 63.13, high is 6486, low is 6152, and close 63. Okay, now we've got two groups. We're not going to be confused. We're going to subtract the open from the close and the high from the lows. So 63.13 minus 63.11, which is 0.02. Okay, which is 2 cents, and high versus low gives us much more than that, which is $3. Okay, so we've got $3. How far away are we? $24 away. Let's see, $24 away. So based on yesterday candle, we're not even close. We're not even, we're a little more than 10%. Okay, but the problem with that, with the numbers that we just did, is that one candle doesn't really give us anything. Okay, one candle is yesterday's candle, and yesterday candle is, well, you can see, right? Looks like a firefly. Doesn't have, we've got some volume here, but the result is almost it ended almost as much as it started. So the numbers here doesn't really reflect how crude oil behaves. What we need to do is we need to analyze many more candles and accumulate all the differences. Instead of analyzing all those candles, we can click on indicators, and instead of simple moving averages, whoever asked me this question, I think it's you, Jen, we can type here AVE for average true range. We'll click here on the average true range and drag it to the right. And now we can simply select how many candles we want to analyze. In this case, we'll leave it as 14. Actually, because we're analyzing weeks, and 14 weeks is quite far away, 3 months away, I'd maybe change it to 6, which is 6 weeks away. That's a little more than a month. It's a month and a half. Yeah, we can go with that. Maybe also change it to something more reasonable so we won't be confused. 1, 2, 3, 4, 5, 6. Perfect, perfect. So based on the indicator, it seems like the average movement for oil per week is 4.78. All right, we'll jot that down. Not like the candle in here, not like the candle, $1 higher, more than $1 higher. So we've got ATR based on past 6 weeks. Now, I'm asking you guys again, we are $24 away from our take profit. And I'm asking again, is it realistic that it will get there within a week or not? What do you guys think? It's way more than the range. You're right, Max. It's way more than the range. It's actually 5 times more than the range. Okay, who else? All right, Sadiko, it's way too high. Yeah, all right. So we see that since the average is 4.78 and I've targeted something more than $24 away, it's not in our range, right? What would be a reasonable level to choose? Well, since we are with a buy, we can just increase the original price we choose to enter by the difference. And this gives an indication to a realistic price. So instead of 60, instead of 84, we can maybe go for 64.78, okay, which is the exact difference. But since I know that this difference is not guaranteed, I'm going to optimize it to a round number. And instead of taking this 4.78 exactly as it is, what I'm going to do is I'm going to make it a round number like 4. Okay, this way as a precautious, if I target the take profit specifically at this price and it doesn't get to it, I still manage to trigger the take profit. It's a bit complex what I said, and I'm aware, but we don't have a lot of time, and I'm trying to give you as much as content as I can. So let's make it 64 instead of 64.78, like that. And if it moves less, you can see that it's reversed. It reversed on those levels as well. So if I place it here, it might not get there. So I want to push it down a bit. This way I feel a bit safer. Now, 55 is actually close to the range. It's $5 away from the entry. Still, I'm going to do the same exercise. I'm going to lift it to be $4 away instead of $6 away. This way we get the same ratio. So 64 and 54. Oh, sorry, 56. And now we can see, because we're $4 away and we have 10 barrels, we can make or lose the same amount. Okay, but well, the only problem that I've got with this scenario is I'm not really here to make $40, but much, much more than that. Okay, so how can I make more? Well, we'll see. First of all, I have to set myself a target reasonable in here. Let's call it $1,000. Think it's nice. The time length, I think weeks work out for me. I've already analyzed weeks, so why not? $1,000 in a week does make sense. The price difference we choose initially was the reference from the ATR, but we've changed that from 4.78 to 4 as a precautious to target the take profit with the small difference to allow the market to maneuver. And lastly, we've got the units. So the units we've got now, 0.01 is 10 barrels. Okay, how so? Because one lot with oil is 1,000 barrels and 10% is 100. So 1% is really 10, which gives us 10 times 4 times the price difference equals 40. How can I get to 250? This way I can also know who is very good in math from the audience. Okay, how many barrels we need to buy to make $1,000 with $4 a $4 difference per barrel. I'll give you a nice equation for this. Okay, so we're gonna go target divided by movements, which is, okay, who can tell me? Since we take 10, we get 40. Yeah, we take 10, we get 40, because this is $4 difference. How many we need to get 1,000? So we can just divide 1,000 by the 4, and then we get, who knows? Gonna give another 5 seconds for you guys to answer. Okay, who knows? Very nice, Cliff. Very nice. Oh, you're a veteran. Didn't see you for a while. So 250 is the necessary number. We're gonna place in here 250, examine that the results, the numbers make sense, and very, very nicely we can see that it does. It does perfectly land with what we wanted to achieve. So as a conclusion, we'll change it in here to 50, which is 0.25. Yeah, and we are great. Okay. Now, to recap what we did, initially we just had the general trend. We thought that with the general trend, oil is in a buy, but we weren't too sure how far up it can go. And initially we did target the higher price, 84. But when we compared it with the previous candles and with the average true range, we've came to the conclusion that it's way too far away. Then we looked at the same difference from the ATR, and we've selected something more realistic. Instead of $24 away, we choose $4 away, and the same apply with the stop loss. Now, as we can see, we can gain or lose $1,000. However, if we take the position just like that, and I have to just jot that down real quick and change obviously the numbers to what we've selected. And we can see in here, we can make 1,000. In here, we can lose 1,000. However, the issue with this, if I take similar positions, and I'm going to say a bit more advanced things right now, but I really want to help you with this thing. So, okay, if we take similar ratio for another 5 positions, we can gain or lose similar amount. So sometimes what we want to do is adjust the ratio, okay, in case things doesn't make profit all the time, so we can lose less than what we gain. Let's suppose maybe half. We can go for even lower than that, but I think this convey the message that I'm trying to give you. So if we've got 5 positions with this similar ratio, so what can happen is we can make or lose 5,000 or make 5,000 or lose 250. What this gives us is if some of the position make profits and some of the position have losses, we can maybe balance ourselves better with a strategy and keep making progress. All right, how do we minimize the loss without changing the possible profit? Who knows? Right now we've got 1,000 and 1,000. Okay, how can I adjust my potential loss from 1,000 to, I'll make it a bit easier. Make it a bit easier, and I'll convert it to percentages. Okay, so 10%, $10,000 is our current balance. $10,000. If I'll compare it with 1,000, so I can go 1,000 divided by 10,000 equals 0.01, and then times 100 gives us 10%, right? So reduce the stop loss. Wow, Mr. Jan, that's excellent. Thank you. Already provided us with a solution. So, but still, I'm going to show you the way how this can be done. So, we'll give you an equation. So we can make it potential loss divided by balance equals factor. And then we've got factor times 100 equals percentage exposure. All right, and exactly as Jen wrote here, what we can do, if obviously if we'll reduce the lot size, we can do that. We can reduce the lot size, and then the loss will be less. But the issue with that is that we're going to have a lower possible profit as well, which we want to maintain. So if we take the difference from the 4 and instead of targeting the stop loss $4 away, we're going to target it only 2, which means from 60 to 56 is 4, so we can make it 58. Then we potentially lose half. We can potentially lose half, keeping a nice ratio of 1 to half, okay, or 1 to 2. It depends how you're looking at it. Okay, but this way we can better adjust our risk money management. We have a wonderful position we've constructed in here. Of course, it doesn't assure us in any way that we'll make profits, but we've got everything written down and organized exactly as the plan that we've made. And of course, I can take the position as it is with the prices designed like that, and I can just use the same method that I gave you today for any other instrument as a procedural method, and it would still be fine. You see, I still got target time movements in units, entry, stop loss, and take profit, and this can be very, very useful. And I can, of course, multiply that and put it in an Excel very easily, okay? And this way I can maybe think of a nice strategy altogether. Now, the last thing that I'm going to show you today before we say goodbye is to see that we can actually take the position. We've got the budget to do that. How does that work? We've got price per unit, which is the price displayed in here. We'll call it 60, even though it's 59.85. Might get there by then. All right, so 60 per barrel, and we've got the units, which is 250. Excellent. And if we go price per unit times number of units, we get value. All right, and then we've got the leverage. What the leverage does, the leverage multiplies buying and selling, meaning since I've got 10,000 and I've got the leverage of 1 to 10, I have an ability buying strength, selling strength of 100,000 for this particular instrument. Which means since I multiplied by 10, I can just divide the value that I've got here by how much I multiplied by, which in this case is 10. So as you can see, the system already did this by itself and did value divided by leverage, which is margin impact, margin requirement. Okay, and what does that mean? It means that the amount that I need is not that. The amount that I need is this to open the position, right? Which comes down from 14,977 divided by 10. Okay, it gives us 1,497. Okay, which absolutely we can see that we can absolutely take the position with no issues using approximately 15% of our available margin. Now, guys, we've got another 5 minutes. I see a lot of people raising their hands. Feel free to ask away. This 5 minutes can be dedicated to answer your questions and maybe assist with analysis. Yes, whoever asked me the questions about analysis, you're welcome to remind me. Let me search up the list. Okay, Jens, it seems like that was you. You asked about the indicators. What I showed about the average true range, does it make sense how to use it? I hope it's a bit clear now. And of course, if anyone else wants to ask any questions about what I've explained so far, you are welcome. So what you did in the beginning with the open, close. All right. So there is a question from Farid. What you're asking is what I did with the open, close, and the calculation that I did in the beginning before the ATR. What I did is pretty primitive, okay? But the reason that it's also good to know that is because of this candle as an example. You see, even though the average is 4.78, yeah, and I've selected six candles for the ATR, right? Now let's count together. 1, 2, 3, 4, 5, 6, right? We included this guy in our calculation. So if I go too far back, initially that was 14, right? You guys saw that it was 14. 14, it was here, 14 weeks, that's more than 3 months away. And I feel that the average that we had 3 months ago, it's not the same average we're having now, right? We see the candles looks different, the size of the candle is different. So what I did in the beginning, this manual check, this primitive thing that I did, subtracting open from close and high and lows, is to know when there is exceptional occurrence like this, and to know whether you want to include or exclude, which can drastically change your average. So for instance, if we're going to change from the 6th, we choose into 4 and exclude that candle out. 1, 2, 3, 4, that means that it's inside, we'll make it less. Okay, it's changing the average. As you can see, it's changing the average, not by a lot, but still, we've got this candle almost at the same size. Okay, if we'll take it a bit farther away, we might as well get even a lower average. Okay, it seems it's around the same levels, really, but you can choose what time frame to select and how to work with the ATR. But the good thing about it is that even if I'll change the time frame to something else, let's suppose I don't do weeks, I do daily trades, still it's going to give me the average per day. You see, it's already prepared for us. And if I want to analyze maybe hours, it's going to give me the average per hour. Yeah, whatever time frame I'm choosing, the ATR is going to adjust accordingly. Okay, this is why it's useful, and I'm showing it to you. And yeah, thank you for the question. Any other questions to the that you would like to share with me, guys, before we say goodbye? Why did you place? All right, so Alex, you asked a very, very good question. Why did I place those lines? But I didn't want to explain about it in the beginning because we didn't know anything and that wouldn't make any sense. But I think maybe now it's the right moment. Those lines that I've placed, those lines are marking certain levels which can approximate to me when crude oil can reverse. Those lines that we see are actually prices that the crude oil has been and turned around. Same apply with this guy over here. You can see that it's green though, but if we look at the actual shape of that candle, we can see that it started going down, it went higher, and then it closed on that price. How can I possibly know that? Well, very easily, because of its shape. And if we can see that the tail is up and down, we know that it reached higher and lower, but it closed on a different level. And if we switch to days, we can see that this is exactly what we saw from outside, right? It went down, it went higher, and it closed eventually where we see. Okay, that was this week, from weekend to weekend. Yeah. There is another question. Do you have one indicator that you trust the most, which indicates you if stocks goes up or down? No, there is no such a thing, Jan. Not that I'm aware of. You can combine two indicators like RSI and Bollinger for more precise analysis with demand and supply. RSI is relative strength index, and Bollinger bands also provide you with the difference in deviations, which allows you to make a mixture of if the price has changed. We don't have time because we ran out of time, but ask your account manager. I'm sure he can assist you with that. Guys, it was a pleasure giving you this webinar today. Unfortunately, tomorrow we're not going to have the live Q&A, but you're all welcome to join us next week. I hope that you've learned one practical thing from this webinar. As I said, until then, best of luck with trading. Have a fruitful week and have a good day.